Trillions of dollars are at stake this Friday in the third week options expiration. Hello, ladies and gentlemen, and welcome back to the channel where we talk about stocks, commodities, and cryptos. We've got some amazing levels coming up, and also we need to discuss, of course, what exactly is going on with Tesla stock. It was pretty much the biggest loser of the Thursday trade. So where do we close? It's a long leg doji, indecision ahead of the options expiration. We know that maximum pain is a little bit lower. We need to discuss all of this and a whole bunch more right now. Let's get into it. Well, welcome back everyone to the Daily Show where we talk about markets around the world. We've got a big one coming up because there is volatility. It's back in these markets, and we need to discuss, of course, smart money flows versus dumb money flows. If it's your first time here, welcome. Consider subscribing. And if you find value in today's video, remember to smash that like button. It really does help us out. And it's what makes this community the best on YouTube. So let's discuss what's happening here, because we now have some serious divergence between dumb money and smart money. Basically, when we see this type of thing, it's often pinpointed close to the highs. And we're seeing a very similar period here underneath the 4,200, currently into earnings on the S&P 500. So what do we do? Well, in 2022, we used this very effectively. And even in 2023, back in the back of January into the start of February, we recognized the signs of probably a turning point in the markets. Let's take a look at sentiment, because that was also something that was driving very hot at that time. I think we got a 35% reading towards the bull side. We had a very neutral stance, and we had a lowering or fairly low bearish stance. And that's where we find ourselves kind of at the moment. The only difference is there's a lot more neutrality, and there's pretty much a flat bearish stance over the last couple of weeks from retail traders. Now, we use this as a contrarian indicator. When everybody's greedy and everyone thinks that the markets are going super bullish and we see technical reasons to say otherwise, maybe it's a good time to go against the retail herd, because in general, we want to follow the big money flow. And in this weekend's video, we'll be getting the new updated flow statistics for realistically what the biggest money managers are doing right now. And also, we want to update our gold charts as well to see whether they're buying or whether they're selling those gold bullions, because this is as critical point as we know for gold. Let's move over to Fear and Greed Index. It's dropping a little bit. Started the week at 70, now down to 64. Markets have only fallen about 1% from their highs. So it's not really a huge shift yet on the fear and greed. We still sit in the greedy component of the markets. Now, again, if it's your first time here or you haven't already followed us over on Twitter, consider doing so, as we posted up two big charts today, both our thought processes on Bitcoin, so you can go and save that, have a look at it, and of course also Tesla. Both of these have been incredible zones. And I think specifically the Bitcoin chart this week has been fire. We've been all over that one, and the shorts have been doing incredibly well. But we find ourselves at a pivotal turning point for Bitcoin, as we will look at later on in today's video. So let's discuss some of the big key points that we've talked about this week. We're going to breeze over a lot of these. If you want to get them in more detail, it's in every one of the videos this week. We've covered this discussion. So money market fund assets. We're still seeing people going into cash-like or risk-free style assets. Bonds, treasuries, cash, all of these things are still on the rise. Now, traditionally, markets have bottomed when we see this kind of topping off. So we're going to follow this closely through 2023 into, I believe, 2024, so that we can see when money managers actually switch from being in these super cash-like assets to going back into the market. That usually means that there's a significant turn, and it's usually the proper recovery that means the bottom is completely in. We're not seeing that at this stage, which is interesting considering where we're at and what people are saying. Let's move over to component correlation or breadth in markets. We know that markets have been going up with less companies. It's been about 45% versus 70% back in January and February. You can see here the last time we got a reading like this was 1999. Yep, from that point, things went pretty bad. And we're not necessarily saying that's happening again, but we do have the stats. And if we look at the stats over time, not many readings, again, all the way back to 1920s. And when we get these readings, it's a bit of a kind of downer for markets. You can see here that only 62% of the time were markets actually bullish by the close of a 12-month period. And then sometimes we got these reads during even small recoveries in an overall bear market, and often at the peak. So we saw a slowdown in overall profitability of markets. You can see the stats down below there. And here are some stats just a little bit more refined to the current statistical probabilities. Now, we had an incredibly low VIX. We hit 16.37 or whatever it was, and then we spiked back up. Now, for a very small rally, this was a huge drop in volatility. And again, we pulled the stats from it. We had a look over that, and we found that it doesn't present a favorable scenario for the markets over the next month. They often say sell in May and go away, or sell in May and run away. Maybe this is the time that actually happens. We'll bring up the stats for that in a subsequent video. But generally, May has not actually been a sell month for quite a few years. Is it this time that it turns into a sell month? So May was always synonymous with selling. Now it's been a little bit lackluster on that for Australians. Certainly May does tend to sell off a little bit more on the Australian market. But it is interesting when we get all of these stats together, including the 14th best run up into this earnings season. When we have stats like that, often it means that it's a buy the rumor and it's a sell the fact. So basically we've got a sell the fact, and across the board, you can see down here, the stats don't tend to lead very well. And if we have this in the Q1, it gets even worse. So the percentages here turn pretty bad for the S&P 500 around these levels if we've run in the way we have. Speaking of earnings, we know that we've now had Netflix, we've had banks. Banks have performed better than the low expectations they had in. And basically tech has not performed necessarily as well. Tesla is getting really hit hard for its price cuts and obviously potentially some destruction there. And Netflix is kind of like all over the place. So as we move into the biggest tech stocks, we're probably going to get the real basis for the markets. And when we look at some of those big tech stocks like Microsoft, Amazon, and others later on in today's video, I think you're going to find something very interesting about where they all sit. They are all setting up for either accumulation or distribution moves. And we should see a breakout at some point that will most likely tell us the direction for a more sustained swing trade. Let's look at the rotation over the last 24 hours. We're always looking for defensives within a tight range when we're kind of moving sideways. We did see defensives hold the best. Those semiconductors out of nowhere was just sitting there as well. Basically, we had staples, utilities, gold. They were some of the best performing over the last 24 hours. And it was more of a sell-off in regional banks, communications, consumer discretionary, those types of ones. When we move over here to the 5-day average, you can see it was really about banks that have been out in front, and gold miners have been hit the hardest. And we'll talk about gold a little bit later on today's video. Well, just before we jump into the charts and we take a look at all of the key levels we need to be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you're one of our Australian audience members out there, or even if you're somewhere else in the world, there's a bunch of special offers in the links down below. But I want to talk about a new partnership between Tiger Brokers and ShareSite. So one of the things that sometimes platforms let you down on is being able to really track all of your investment data. If you're holding a portfolio of many different things, you want to know your dividends, your franking credits if you're from Australia, and a whole bunch of other things for taxation reasons. Well, because of this reason, realistically, Tiger Brokers went and sought out one of the best. And one of the best in Australia is, of course, ShareSite. Now, if you're interested in figuring out how to connect both of these, you can do so by going to the ShareSite website, going to help, and then literally searching for Tiger Brokers and how to activate it. But this is something that I think is an extra bonus on top of an already great existing platform. And it just shows you that Tiger Brokers are really taking on feedback. This was actually one of the bits of feedback that I gave them a little while ago, which is that platforms require not just great trading software, but also great basically accounting software. We want to be able to make sure that it's as smooth a process at the end of the year, just like it is at the start. Let me know in the comments down below if you agree with this. Also, coming into earnings season, do remember Tiger Brokers has a whole bunch of live feeds for different companies out there as they give their report announcements, a bunch of news announcements, and more importantly, we're also starting to now see a whole bunch of stocks coming out. So in the next week, especially for the US, we'll be getting some of the biggest technology stocks coming out with their announcements, and you'll want to be all over these. So remember, markets are at criticals, earnings announcements matter, and you can just see how many there are here on the weekly view. So if you haven't considered Tiger Brokers, check them out in the links down below. And if you're from Australia, you might want to consider the share site, at least in terms of seeing whether it's the right solution for you. Thanks so much. All right, well, let's jump into the charts. We'll start off here with the VIX. So as we mentioned at the start of today's video, the volatility index hit these lows. This is an extreme low. This is where it all began, December 2021. Just before we saw this whole kind of sell-off occur, we got a VIX reading this low. And that meant that basically the markets were greedy. So we're back in the greed on the VIX, and you could say 0 DTE got us there or whatever else. But if volatility is going to come in, it has to come in around here. And going into the third week options expiration is a very interesting point. Now, also yields are interesting because we go to treasuries, and what you might notice here is an island reversal. That is a gap below and then a gap above with a nice base coming off a pretty good demand or support level. So is it time for treasuries to actually find some buyers? If that's true and treasuries find buyers over the next week, then that would usually mean that yields are going to come down. So things like US 2-year and US 10-year could be being foreshadowed here with a decline. When we're looking at high yield corporate junk bonds, they weren't down very hard considering the market was basically flat to down. So it's not like we're getting any signs here from high yields. We do watch high yields. If they drop and the market hasn't dropped yet, there's something wrong and we need to be paying attention. So that's an interesting one there. When we go over to the US 2-year, you can see the US 2-year dropped a little bit. US 10-year also dropped a little bit. The key point for the US 10-year is down here at 3.32. We need that to be closed below to really start to see basically what I think is demand destruction. Effectively, the economy being so sick that it's going to need the Fed support a little bit faster from what is most likely now going to be an upcoming pivot. Speaking of sickness in the economy, Dr. Copper closed near its low. Here it is, Dr. Copper. We've been big on this since January. If you don't know why copper is important, you need to get on thinking about that. It's led to a very nice trade here for Australian viewers. If you've been looking at the BHPs, the Rios, the FMGs, you would notice they're starting to fall off, and it could bode bad things for the Australian markets and possibly even the FTSE, because when the Dr. Copper goes down, usually you see commodity stocks across the board start to struggle. And if we go to the weekly here, you can see again, it's held that weekly close. And at this stage, it's putting pressure on this exact point. Now, I'd like to see copper have a bad Friday. If it does and it closes below, then we're probably moving for copper to go back down into these 390 zones. And that should, again, put pressure on the stock market across the board. If copper turns, it's usually a bad sign. If you actually go back over here, and I've never mentioned this, take a look at what happened on the week that we found out about this whole COVID thing. Look at what happened with copper. It got crunched. The stock market actually went up over that period of time and they got crunched later. Then we saw a recovery. Look at the dates, 23rd of March. So we saw a recovery on copper and copper went ballistic. So it's a great read on these specific times. You don't always want to use it, but when we're in such worldwide chaos, this is the time that we want to use copper. Let's move over to the dollar. It is floating around in la la land, this one. So technically it's still in a short sell. If we're going to go to a long buy, we're going to need it to close above this downward trend line, therefore starting to make kind of like a higher peak. And I would think it's going to do something like this. And if that happens, then we can probably look more towards the buy side. A lot of people like Goldman Sachs and others are saying, oh, we're out of dollar shorts and all of these types of things. Look, we can't really believe exactly what's going on there. What we can instead say is that we're at a previous level of supply, and anything in here still involves potential shorts. If we then breach through those levels, then we can start saying, okay, well, this looks like a potentially an accumulation. I haven't discounted the fact that dollar could get below parity. That is the 100 down here for the dollar index. And I'm looking for it to go potentially at that point down to the 98.60 to 99 zone. But that's only if we make a new low. I'd be very neutral on dollar here. Let's move over to gold. Now, gold, we talked about this getting too high a little while ago. and for it to be struggling. And it certainly did struggle. It couldn't get past that 2040, 2028 zone with a close. This week will be important for it. You can see where it's trading. And if we actually scroll back to the 2-hour chart, this is where I expect gold to probably find the short if it's going to. So maybe dollar index finds some long, gold finds some short. It's got a short basically in this area here. And this trend line with all the stacks around that zone is probably the key kind of level. If it's going to short here because it just kind of tapped into that zone, buyers may recommence around 1975, 1980 along with this trend line. So you could start looking for your activation potentially in there for longs. But yeah, this is basically where I would usually expect shorters to recommence in gold if they are going to. Of course, it's all potential. We'll find out whether that does happen. Natural gas, no gap fill yet. This is our red box, did come down to it. I'm kind of thinking natural gas, something like that. It has been basing. It had a pretty good weekly so far. We do want to see it probably hold a nice weekly close. So I wouldn't even be hating on it if it goes back up and closes nice weekly, comes down next week, and then does the switch. But remember, this is the Widowmaker. We knew this was a serious point, the 2.1. It's up quite a lot off that, but we need to see it continue to hold this ground. What about oil? Well, oil has shorted fairly drastically. It's not fully gap filled that whole Saudi OPEC thing or whatever was going on there. But what we do know is that if the markets come back up, there's a big trade zone between 80, 36, and 81. This is where I think short sellers sit for oil. And I believe that somewhere in this range is probably where, if you're a bear on oil right now, you're looking for that activation. It could be a good swing range as well because we made a new lower low. And oil, I think, is in demand destruction. We go to the daily, we go to the weekly. Pullback should be met by sell demand at this stage. So let's move over to the elephant in the room. That's got to be Tesla. It's sold off 9.75%. It's not good news what they're doing. Obviously, competition is real. We don't want to get into the fundamentals here too much. But what I will say is that we have maintained a concept of 145 eventually getting hit. Could it be this time? Yes. Would I say that there could be buy the dip buyers around this level? I think that there are potential scalp zones here for the Friday session to get a bit more above the kind of expected weekly options low. You're going to have to see the right signs. Maybe we'll zoom in a second. But overall, I still think 145 and even actually back down in these 120s is very possible for the Tesla stock. And I'm not bullish on it at this stage. There's no reason to say, oh, this is super bullish for the long term just yet. We don't have those signals. Let's go to the 10-minute chart just so we can see what's been going on in the session. We ended up recovering near the end of the day, though I would have preferred it recovered back above here to show us it really did have strength and some kind of, buy the dip mentality in it. It was pretty much just an initial retail buy followed by getting crushed. This is where I wanted to see the buyers recommence in this little red box zone. And they got it back into it, but it's more testing from the bottom up. So I'd like to see initial burst, maybe pullback, and then that pullback to actually show us that, okay, well, we're ready to get a little bit of buy the dip mentality. Otherwise, if the weekly does close down where it is right now or a little bit lower, we're probably going to 145. And again, if the stocks start turning down, these levels become all too real for Tesla. So not really loving the zone just yet unless we see a significant turn. Let's refresh now the options expiration for Friday to see whether this makes sense. Well, the max pain is actually 183. And if we look at the put wall, it's sitting at 150. So it's not like we always maintained anywhere in here is pretty okay, I think, with the options makers. 735,000 units, nothing huge. So we're basically just sitting right in that range. Let's move over to one of the reasons we don't like the market right now. It has to be breadth. We're basically moving up on less stocks than we were back in the January run into February run. It's only 45% of the stocks, as we mentioned before, compared to 70% plus. That shows us that the market is a little unhealthy. Speaking of unhealthiness, realistically, the trend line that technically stopped every single one of the market's rallies in 2022 has been hit again, and we're trading right around this weekly close. Could be very important for Apple, and we will continue to look at this into earnings. Imagine if this was a double top and the markets went underneath here. That's when you're starting to say, okay, rallies are going to be met by sell demand. We're in the swing potential trades towards short side. So Can we actually say, oh, it's really short right now? No, I mean, the trend is up. You can't actually say it's really short, but you know that you're at a zone where if you were in it long, most people would be looking at it from a perspective of potentially descaling some position and then, waiting and seeing the next reaction. But you can see it's kind of like floating up in this nice little channeling range here. And I don't think that Apple is necessarily weak as a stock, but it's at that critical. And it's not just Apple. Look at Amazon, right where it is. Breakout new high, potentially sucking in liquidity. Maybe now we fall off. Google, you can see again, testing these highs. Microsoft in a distribution or is it accumulation? Nvidia, very similar thing, creating a range. And if we go to things like XLC, you'll see here a breakdown actually in the communication sector over the last 24 hours. So many things right at these levels, showing that they're coiling for one big directional change. And we don't quite have those breach throughs yet. But once we do, it could get really wild. If the market comes in super bearish and you've got something like that on Nvidia, well, that's an island reversal towards the downside. And we might see a continuation follow through at that point and start moving a nice recovery back down or like at least pullback. This is a big trade trend. And if we actually do the percentage from the lows, it's pretty much upward spiked around 155% with very little pullback. So I think that's something important to note there. Let's move over to the XJO. If we take a look at the XJO, we get the higher high swinging past this area here. If copper keeps falling, the Australian market will generally fall off. So that's not really a great sign for the Australian market. We're looking for a new low. It tested it in this morning's trade. It has not done it. So no turn just yet. Nice uptick. Certainly an interesting point. And I guess, for me, it probably is starting to look a little bit more bearish at that point. Let's move over to the US 2000 and take a look at this market. So we know what's going on here. Pretty flat trend line on the way up. No turn just yet. We still see a series of higher lows. So again, weekly could be one of the decision factors. We know where the most traded zones are, so we're going to look at that for potential, buyers to recommence. And at this stage, again, it's just looking more bearish than bullish because we have not been able to trigger past the 1810 zone with the daily close. No daily close above 1810. Yes, we're forming higher lows at this point, but that could all change within the next 24 hours leading into this massive options expiration. The Qs, look at that. Could be distribution, could be accumulation. At the moment, of course, we're guessing that it is distribution and that the market is starting to look weak. And with a candle like this, yes, that looks quite weak. So now market participants probably, well, they won't want markets above 320 with a close on the Qs, because what that would do is it would kind of invalidate this candle, which is actually looks like it's recovered, gap filled, and boom, straight back down. And that shows us the bears were in the vicinity. They were out of hibernation and they realistically allowed the market to rally and then dumped it, getting that volume in on this market. A new low now with that type of candle is a good storyline reason to say, okay, maybe the swingers are back in and bears are really at these points. Let's have a look at the chop on the NASDAQ. So this is just the futures NASDAQ. You can see the chop all over the place. No closures above. Beautiful retest. Lots of traps in here. New low formed underneath those lows. Bit of recovery to get the gap fill. And then we came back down. We're looking for a new low. Pressure into 12,842. Fill the gap that's there. Probably buyers are around this zone. So I'd expect buyers to show some commitment. And you're liking that type of thing at this stage. For buyers, for big bulls, all you want, closure above. Give me a closure above so that then we can look towards the next level of what we call equilibrium on this channel. Let's move over to the SPY, expected weekly options highs and lows. The market's not really near either of those now. And if we go to the SPX, you can see I've marked out here number 1, number 2, number 3, and number 4 gap fill. And the market did a pretty good job of getting back up. It didn't quite get the full gap fill. So if you have a look here, I think the full gap fill on the last daily was in here. So we've technically now got an unfilled gap up here. So we can mark that just so we know. It's gone wick to wick, which a lot of people consider as a gap fill. So I don't, but it definitely is considered. So let's say it's a half gap fill. So it did a pretty good job there. And again, it's opening itself to go back down to the 40-90 gap zone. And we'll explain that with the futures. Let's take a look at our updated futures for the S&P 500. We've got a trend line sitting at 4100-ish if it falls off. We've got a 40-90 gap fill, and we have a bit of confluence around this zone to see buyers potentially recommence. I'm not sure if I like it as much considering how low we got on the previous one, and then we found that recovery. So that will be interesting. But yeah, we know where the demand is. It's about that 40-90. That's the key zone we're looking at. Look at the 2-hour chart. A lot of confluence around that 40-90 zone. So we could easily see the markets come down, spike back up, and then find buyers. If the markets hold underneath here, then we're probably looking for further sell-offs to start filling those the other 3 gaps that are down below. And if we manage to get through 40.69 next week, then we've instigated a high-low, higher-high, lower-low. Qs will be basically double topping or distributing, and everything will start to turn pretty bearish at that point. So you can really start to see why there's so much going on in these markets. Even this trend line, look at this. This is probably the trend line that actually bought that market up yesterday or today in the markets in the US. And you can see here that there's so much intersection with this point. If that is taken by the bears, and specifically if they keep trapping it and moving it down below that 40-60 zone, that really instigates the turning effect that rallies will be met by sell demand. And we haven't seen rallies being met by sell demand, I guess for almost a month now. It's just been, generally speaking, rally, sell off, buy the dip, grind. And this is just a slow kind of melt up. And generally they say a dull market you don't want to short. Yeah, I agree with that. However, we had some really nice levels around that 41.77 zone. So that certainly instigated a lot of this. Let's have a look at the max pain. We'll refresh here. Sits at 405. Actually, just to make sure we get the refresh, because we do want the refresh. Refresh it before the market opens as well. It will switch a little bit. So you can see here, if we go down, you'll notice that we have a 405 max pain, currently trading at 411.72. So room towards the downside for the max pain. And if we go to the big put walls, there's really just a bit on 400. So there's room for this market to actually go down. On the bull side, you would think that it's going to be very tough for it to get through kind of like a 415 or a 420. So realistically, it's best for the market to stay in the zone it is right now, if not drop further to make and line the streets pockets with even more of our retail cash. That would be at least the best thing they're looking at. If we move over to Bitcoin, I think crypto has been the best trade this week. I knew it would. I just had a suspicion it would be. I was so excited about Bitcoin hitting our 30,200 mark, and then it created basically trading perfection in terms of the way it shorted off. I'm really happy with shorts here. Had some guys in the community make 27-1 trades on this, and they would have hit it last night, so they'd be pretty happy with themselves. Some excellent trading in here. Some excellent trading in here. Some great trading on the way up to that zone. And now we find ourselves on a really good point, actually, for bulls to recommence. Now, will they do it? I don't know. I mean, Bitcoin's been pretty weak this week compared to the stock market, which some people believe it leads. But we're in a nice demand zone. I could see it doing something like this and even trapping further shorts into here. Then maybe getting a bit of reprieve on the Bitcoin side. But yeah, very, very critical zone here. One of the biggest traded levels, huge part of this range. And what it does here, I would suspect there's buyers, but what it does here could become quite important, because it might do something. Well, my thought process is basically something like this, and then maybe further down pushing into that 26.5. Now, if we get underneath that, then all of a sudden, what have we got? A giant head and shoulders, and that could be pointing towards further weakness for Bitcoin. But bulls, this is the level that they'll be looking at. In terms of the news moving forward, let's scroll through here to the current week, and you'll see that we do still have some information coming out. Bunch of European data. Then we have flash services PMI, which begins at 9:45 a.m. New York period time. If you haven't already, follow us over on some of our social medias, including our Twitter. It's a great place to hang out, our Discord community and everything else. And if you're also interested in a couple of free trading cheat sheets, you can gain advantage by just clicking those links. I also want to just remind everybody that the special offer from Tiger Brokers, specifically for the Australian audience and others out there, look at the links, is open, and of course, US $25 worth of Microsoft fractional shares. It doesn't get better than that. I love the Microsofts. So that's a big deal. And ShareSite's just an extra reason why it's a great platform. And I'm really glad they took that feedback on and they put it in there, because at least then it's an extra additional thing for people that may want to be looking at it. Thanks so much, everybody. Bye for now.